Hey guys, and welcome to Zonos Crypto. In this video we will take a look at the latest news about Bitcoin, Ethereum, as well as a comparison of proof of time versus proof of stake, and many more. Okay, let's get into the market watch. Bitcoin is coming in at 22,727, Ethereum over 1600, BNB 264, Cardano over 52 cents, XRP 36 cents, Solana $41, Polkadot at $7.43, Polygon at 87 cents, Avalanche at almost 24 bucks. The largest movers in the last 24 hours are Lido with 14%, Synthetics with 13%, Cardano with 8%, Bitcoin Cash with 6.75%. Over the last 7 days, it's Ethereum Classic 31%, Phantom 30%, ApeCoin 29%, Bitcoin Gold 25%, Synthetics 23%, and the biggest losers are Terra Classic USD with 14%, Aave with 10%, Elrond 6%, ICP 5%, and Tron with 2%. So then let's get into the first news. Not just Bitcoin price, factors affecting BTC miner profitability. As many crypto holders are gearing up for a bear market, what are the factors influencing the mining business? The ongoing cryptocurrency bear market has triggered a massive decline in Bitcoin mining profitability as BTC mining expenses outpace the price of Bitcoin. Closely tied to the drop in the BTC price, Bitcoin mining profitability has been tanking since late 2021 and reached its lowest multi-month levels in early July 2022. According to data from crypto tracking website BitInfoCharts, BTC mining profitability tumbled to as low as $7 per day per 1 terahash per second on July 1st, 22nd, touching the lowest level since October 2022. Here in this chart you can see October or July 2021, less than 1 terahash, and now we are here at the exact same price again. The majority of big crypto mining firms like Core Scientific had to sell a significant amount of Bitcoin in order to survive tough market conditions. The growing unprofitability of BTC mining has also triggered a big drop in demand for crypto mining devices, causing many miners to sell their mining hardware at a discount, which in regard also means that hardware is cheaper once again and you do not have to spend as much if you would like to build a PC or anything else. This is an advantage. This to BTC. The Ethereum price cup and handle pattern hints at a potential breakout versus Bitcoin. Ether has printed a classic bullish reversal pattern against Bitcoin weeks before the merge launch date. Ethereum's native token Ether has rebounded 40% against Bitcoin after bottoming out locally at 0.049 on July 13th. Now the ETH-BTC pair is at 2-month highs and can extend its rally in the coming weeks, according to a classic technical pattern. The ETH-BTC has been forming a cup and handle since July 18th, and a cup and handle setup typically appears when the price falls and then rebounds in what appears to be a U-shaped recovery, which looks like a cup. Here you can see how it looks like. Here is the cup with the smaller handle here at the side, and then from the bottom of the cup to the neckline would be the potential price target, which in this case is 0.77 ETH to BTC. Let's see if it plays out. Great, then Ethereum to hit 14K in less than a decade, says a survey. Nearly 80% of the research participants think Ethereum's transition into proof of stake will boost ETH's price. ETH's valuation is expected to top 1700 by the end of 2022 and surpass 14,000 by 2030, they said. Possible price pumps would be. On that note, the Aussie comparison platform Finder carried out a research to estimate what investors think ETH will be worth in the following years. Most participants believe the token will tap 1700 by the end of the year. In 2025, its price is expected to surpass 5,000, while in 2030 it could rally up to 15,000. It is worth noting that nearly 80% of the respondents expect to see the surge only if the merge gets successfully completed. So you could say that almost everything depends on the merge. If it completes successfully, and then the price spike could be there. The question is how high we will go. This is only possible to find out after it has happened. So do not forget, always take profits when the price is rising. Okay, now to the comparison of proof of time versus proof of stake. How do the two algorithms compare? Blockchains uses consensus algorithms to choose who gets to verify transactions on a network. What are the differences between the two? Consensus algorithms are processes where validators, also known as nodes or miners, within a blockchain network agree on the current state of the network. So what is proof of stake? Proof of stake is a consensus algorithm that works by users taking their tokens as collateral by locking them into a smart contract. The system works by selecting a validator, also known as miners or nodes, to process a block of transactions. The validator submits the block to the blockchain, and if the block has been validated correctly, they receive additional tokens as a reward. So then to what is proof of time? Proof of time, or PoT, is a consensus algorithm that uses a voting system to choose network validators and focuses on how long a network validator has been active within the network as well as their reputation. The protocol was developed by Analog and is based on a delegated proof of stake, DPoS, which is a modified version of proof of stake. So how do the two consensus protocols compare? Proof of stake and proof of time share a few similarities. Firstly, they both require validators to stake tokens as a collateral when verifying transactions, with a higher stake increasing the chances of being selected. The main difference is the ranking and voting system used by proof of time, followed by an additional verification by 1000 validators before the transaction is submitted to the ledger. So what do you think about proof of stake versus proof of time? Which sounds easier to understand and which do you think is a better consensus algorithm? If you want me to make a video on the exact comparison or a deeper dive into it, please leave a comment and I will get right to it. A hacker drains 1.08 million from Audius following passing of malicious proposal. A malicious governance proposal, Proposal 85, requesting the transfer of 18 million Audius in-house audio tokens worth 6.1 million was approved via an exploit. Proposals in crypto help communities make consensus-based decisions. For Audius, the passing of a malicious governance proposal resulted in a transfer of tokens worth 6.1 million, with the hacker making away with $1 million. On July 24th, a malicious proposal requesting the transfer of 18 million Audius in-house audio tokens was approved by the community voting. The Audius co-founder and CEO Ronil Romberg clarified that this was an exploit, not a proposal proposed or passed through any legitimate means. It just happened to use the governance system as the entry point for the attack. Further investigation from Audius confirmed the unauthorized transfer of audio tokens from the company's treasury. The company, however, resumed token transfers shortly afterwards. Now to the last news for today. The tax collector wants 55 million from collapsed Bitcoin Ponzi scheme MTI. Liquidators accused of failing their duty. In a fresh twist to the collapsed Bitcoin Ponzi scheme, Mirror Trading International (MTI) saga, revenue collector South African Revenue Services (SARS) has demanded 55.3 million from the scheme's liquidators. The revenue collector added that it wants the tax will settle before the MTI liquidations process is finalized. The South African revenue collector is said to have lodged a claim of approximately 55 million against the now defunct Bitcoin Ponzi scheme Mirror Trading International. The claim lodged with the Master of Cape Town High Court relates to two tax periods, the years 2019 and 2020. So this were the news for today. I hope you've enjoyed the news and also learned something new today. If you've enjoyed the video, please leave a like, subscribe and also hit the notification bell so that you will not miss anything in the future. Have a wonderful day and I wish you always the best. We will see us in the next video. Peace.